Next up, we're going to be talking about how to use the bands. Now that we have learned about all the parts of the arbitrage bands, let's find out how to use it. First, we are going to look for a bullish opportunity. First, we have to acknowledge what was the most recent alert. Which in this case was a sell alert. Here, we can see that price has hit the third deviation or out of bands. Here, we can see that price has hit the third deviation or out of bounds and is extremely oversold. Since we see that these are white candles and that the most recent candle was a yellow candle, we can possibly see a potential bullish move. Whatever color candle that is being printed on a candle, you can identify the color by looking at price. It would change to either yellow, green, blue, magenta, or white. This was a yellow candle that was printed out in the first picture. It then went to make price go bullish. As you can see here, price has been rejecting off of the compass and momentum lines. Once price breaks through these, that will then be another confirmation that price is starting to switch to a bullish bias. Nothing is confirmed yet. We must wait for this bullish candle to get closer to the RSI line. Note how the RSI is starting to come closer to the lower danger zone. Once price, the compass line, and momentum line crosses the RSI line, that is when my first confirmation will appear. The lower danger zone and RSI line rearrange themselves as price consolidates so that they can show a possible setup is happening. Once we get price breaking out to the upside and closing over the RSI line, that is when I really start to actively look for buys. The buy alert will go off once the compass line crosses over the RSI line. And once I start to see a green candle, that is when I really get confident about a buy. When you see the buy alert, and as long as price is over the RSI line, then you can enter into a buy. The upper danger zone is where I will place my take profit. For a more safer stop loss, my stop loss will be under the most recent higher low, as that would be a change of trend, and the exit alert, sell all alert, will most likely activate by then. But for a more spaced out stop loss, I will put my stop loss all the way below the lowest low. And that's where my stop loss will be. Take note of the risk to reward. Here, the risk to reward ratio is a 1.29. Instead of getting that position, what I usually like to do is wait for a break, a retest of the RSI line or the lower danger zone, and then I look for the continuation. Once I get the retracement, that's when I enter into the trade, and then I'll set my take profit and stop loss as I wish. Seeing green candles after the retest of the RSI line is a good confirmation to stay in the trade. And when price hits the mean line, that is where I move my stop loss to break even. Now, as you can see, the stop loss to break even area, it looks a lot wider than where my stop loss would usually be at. Take notice of the risk reward of the same stop loss and take profit, but different entry. I like waiting for the retest of the lower danger zone or RSI line because it gives me the best possible pricing for my trade idea. And as we can see here, the risk to reward is now 1.328, which is double my risk to reward ratio of the previous trade idea. As long as price doesn't fall under the lower danger zone or gives a sell alert, which is exit alert for the buys, then you should stay in the trade. Here, we can see that the upper danger zone has moved down. As price goes to the upside, the upper danger zone moves down. It would then be up to you if you would take full profits here or to take partials and let the trade run. But there were multiple yellow candlesticks that were being printed, so there was still bullish pressure in the market, so you could have kept holding the buy if you would like. Price has now reached the 2 deviation, which is showing that price is overbought. This is where you would either want to have taken at least 80% of your profits or all of your profits. Now, let's look at how to use the bands in a bearish market. Now that we see that price is at the 2nd deviation, we can start to expect for price to start turning around. It is still possible for price to come to the 3rd deviation or higher, so don't try to sell early and cash the top. This bearish candle is a sign that we can possibly look for price to turn around, but you should be patient and wait. Note that throughout the bullish move, there were a few blue candles. As you can see, you need multiple confirmations in order to get the best quality prices for your trades. Here we can see that price has multiple confirmations with the blue candles to confirm the sell. Price used the zone where the 2nd deviation is at and started to go bearish and printed a few blue candlesticks. But price is rejecting off of the upper danger zone, compass, and momentum lines. And the RSI line isn't at the upper danger zone yet either, so the chances aren't at the highest it can be, so I will remain patient and see what price does, as I want the highest probability for any trades. And as we can see here, price pushes back up to the deviation 2 with yellow candles. That is why we wait for further confirmations. And if you guys haven't noticed, the deviation 2 changes from 2nd deviation to 2 deviation or deviation 2. They are all the same. Likewise happens with the deviation 3. Here we can see that price came back up to the zone and rejected off of the 2nd deviation, and then price pushed back down to the downside. This would be a perfect example of where you can use price action patterns to find potential reversals. Now that I see that the RSI line is in the upper danger zone, I can now actively look for a sell alert to appear once price breaks through the RSI line and the compass line crosses the RSI line as well. Again, until we see price break and hold under the RSI line, then we should not look to take any sells. There are some who will look to continue buying once price bounces off of the upper danger zone or RSI when they are being used as support. That would be up to you to decide of that. The RSI line rides along inside the upper danger zone, but it never goes above or outside the upper danger zone. Once price breaks out and closes under the RSI line, and the compass line passes through the RSI line, then the sell alert, buy exit all alert, will be given. Once price gives the sell alert, I wait for the retest of the RSI line or the upper danger zone. Even though the buy alert, sell exit alert was given, as long as price doesn't pass through the upper danger zone and continues higher, then I will remain bearish. Since I don't see a yellow or green candle which shows bullish pressure, I will remain bearish until I see otherwise. And I'll put my stop loss up above these highs so that my stop loss would not be close to getting hit. As you can see here, price respects the upper danger zone and falls to the downside. Once price reaches the mean line, you can move your stop loss to break even. Price had consolidated and now the bands have shrunk. Since the bands have hit my lower danger zone, which is my take profit, most of my profits should have been taken down here. Since the second and third deviation are pointing right up as well, those are signs that price may start to turn around. Unless price respects this RSI line, then you can expect price to continue going bullish. Also remember, price action and market structure is still very much applicable. Usually, when the bands shrink together like this, a breakout happens. This is where you would need more confirmations to try and trade this, as based off of all of my confirmations, I cannot trade this. The buy alert, sell exit, got called right when price hit the upper danger zone, so I can't trade this. And we can see here that price is basically broken even for those who never got out. From the buy alert, we can see that price continued to go bullish, but according to how I identify good trade opportunities, I would not have gotten into this. And that is when you will use the aid of the other indicators to help you whether or not you would want to get into this type of trade or not. And that is how to use the bands.